and welcome. My name's Brian Kaplan. I'm editor of The Banker. I'm here with Silvia Pavoni, who's the economics editor, and we're at the Banker Awards 2012 at the Intercontinental Park Lane. It's a black tie dinner. We're expecting lots of important guests from all over the world. Silvia, we've given awards in 149 countries this year, everywhere from Afghanistan, Belarus, all the way through the alphabet to Vietnam and Zambia. And does it really feel like a year since we were here doing the awards 12 months ago?
I don't think it does, Brian. In fact, I don't think none of us look 1 year older.
Well, you certainly don't, Silvia. I may
Thank you, Brian.
And then you cover Latin America. And how are the awards received in Latin America? And how many guests are we going to have from your region tonight?
Well, I'm expecting a few of them coming to pick up the deserved awards. Being Latin, obviously, we're also going to expect lots of partying after the ceremony. So it should be a good night.
Yeah, I mean, we normally, we're obviously giving awards for great achievement in banking. It's been a very tough year, though, hasn't it? I mean, what are the sort of key initiatives that you've seen in your region in terms of things like takeovers and acquisitions and building up businesses? Has it been a kind of busy year?
It has been a busy year, and despite the fact that obviously no region in the world is immune to what's happening in Europe and also in the United States, Latin America is really going strong, and we've seen lots of expansions outside of national borders. So we've seen, for example, Colombia banks really strengthening their regional presence and improving their exposure, the presence in Central America. We've seen the Brazilians becoming stronger despite some problems with the smaller banks in the country. So we've seen a lot of growth and groups from Latin America growing within the region, which is really interesting, and I'm sure it's going to improve competition with international players.
And what do you expect will be the outlook for 2013 in terms of, again, I mean, will Latin America remain relatively immune from the international situation, or are we now seeing a situation where we're seeing general sluggish growth throughout the world as well as here in Europe?
Well, Latin America is now, I think, more concerned with what's happening in China. So China has become an increasingly important partner for many of the countries in Latin America, Brazil, but also Peru and others. And so what's happening there is going to really have possibly an even bigger impact than what's happening in Europe and the United States. Obviously, the United States have a big impact on Mexico, but that's sort of a different split. So generally, I think it's going to be a good year.
All right. Well, we're looking forward to a fantastic evening. We're all going to have lots to celebrate, drink a bit of champagne, we hope, do lots of applause for the winners, and please enjoy the highlights.
The big one, the Africa Regional Award. The Bank of the Year for Africa as a whole is the United Bank of Africa.
Hello, my name is Paul Wallace. I'm the Africa editor at The Banker, and I'm here with Kennedy Uzoka, the Deputy Managing Director of United Bank for Africa, which is one of the 4 biggest banks in Nigeria and which has won our award this year for Bank of the Year for Africa. Kennedy, thanks for joining us.
Thank you very much.
After some troubles in 2011, UBA has come back strongly in 2012, and it looks like it's going to be a very profitable year for the bank, and it looks as if the bank might even achieve a return on equity of close to 25% or so. What's been the main reason for the bank's turnaround this year?
Okay, thank you very much for this. UBA decided in last year to clean up its books, hence the AMCOM engagement. But post-2011, we have consistently pursued our traditional strategy of growing deposits, creating quality risk assets, and that has shown on a quarter-on-quarter basis. And if you look at our Q3 result, you can see that the bank has come back completely from the lost position and is one of the top performing organizations in Nigeria.
Another reason that UBA won the award was that you, more than any other bank in Nigeria, have pursued expansion into the rest of Africa. You operate in 18 countries outside of Nigeria. You said, or the bank's management has said, that in future you'd like to derive 50% of your revenues from outside of Nigeria. Just given that Nigeria is such a large market in itself, what is the reason behind that strategy? And are you making progress towards achieving it, achieving that goal?
Our foray into Africa was strategic. We thought about how to diversify our income base, diversify our risk, and decided to go into the African countries. And in going to each of the African countries, we did our analysis well to make sure that we went to countries that had good potentials. That is one. Two, we also focused in the key segment of these countries' economies that were growing. Now, in Q1, Q2, Q3, the African countries have now started contributing almost a quarter of UBA Group revenues. And we believe that this trend will continue. That does not mean that the Nigerian operation is slowing down, but in terms of proportion, the African countries, they have started giving quantum performance, and it's obvious from the financials.
Do you have any plans to enter any new African countries in the next 2 years?
Yeah, at the moment, we are consolidating, making sure that our new operations become very profitable, to become one of the top banks in each of the countries. Once we achieve this, then we'll go to the next phase of going to some other African countries and indeed the globe.
Kennedy, thank you very much.
Thank you very much.
And the Bank of the Year for the Asia Pacific is DBS.
Hello, I'm here with Stuart Boyd, who's the Managing Director and General Manager of DBS Bank in London. Welcome, Stuart.
Thank you, Jane.
And congratulations on winning the award for the Asia region. So DBS has obviously had a good year this year. What have the highlights been?
Jane, I think the highlights of this year have been the deep penetrating customer relationships that we've built. We are a relationship-driven bank. I think we've also made great steps forward in engaging our staff and our people. We have some of the best staff engagement levels amongst the banking sector. DBS is also a AA- rated bank, and because of that, our customers seem to be very keen to support and continue with our business. We've also made great strides forward in developing products, new products in the global trade services. We've made great strides forward in wealth management. And I think all in all, our business model seems to be working, and we're very proud to have delivered 11 consecutive strong quarters of results.
Yeah, so that all sounds very positive, but surely it couldn't have been easy. What have been the sort of difficult things you've had to deal with?
Yes, I think as a leading bank in Asia, we're well positioned to take advantage of the growth opportunities in Asia. There's no doubt we have overcome quite a number of challenges, mainly related, it has to be said, to the global economy, where the Eurozone crisis, the US slowdown has certainly impacted growth in Asia as well. But we think because of the deep penetrating relationships we have with our customers, we've been able to overcome this and continue to grow in our core markets, which would be South Asia, Southeast Asia, and Greater China.
Okay, so what can we expect for next year?
2013 for us is going to be a continuing process of focusing on our strategy to become a leading bank in Asia. We're going to focus on continuing growth across our regions, in specific GTS, Global Trade Service products. We will continue to enhance our wealth management business. And all in all, while we recognize that growth in China has slowed down a little bit, we think the worst is over, and therefore we're incredibly optimistic about 2013.
The regional winner for Central and Eastern Europe. So the Bank of the Year 2012 for Central and Eastern Europe is the Raiffeisen Bank International.
I'm Philip Alexander, the senior editor of the magazine. I'm here with Peter Lenk, who's a member of the managing board of Raiffeisen Bank International, who is the winner of the Bank of the Year for Central and Eastern Europe. Peter, many congratulations.
Thank you very much, Philip.
And at the end of 2011, there was some concern that with events in the Eurozone that there would be a spillover effect in Central and Eastern Europe that would make this year difficult. How has the year gone in practice in terms of the performance of the economy and the financial sector in the region?
Of course, there's always some interdependence between Western Europe and Eastern Europe, but you could see that the economies in Central and Eastern Europe continued to go stronger than in Western Europe. It's about 1 to 2%, some countries even 3% stronger in GDP than Western Europe.
And in terms of where Raiffeisen Bank has seen the best opportunities for growth in the past year and in the coming year, what are the areas that you've seen particular strength?
The very strong countries definitely are Russia and Poland. Here you can see a sustainable inherent growth engine in the countries, but also other countries like Slovakia and Czech Republic were doing very well in our group.
And in terms of the product segments, are there any particular ones that Raiffeisen's been focusing on more? In terms of retail, corporate or investment banking, which of those have provided the best opportunities at the moment?
We run a universal bank for 14 million customers. Among those we have 800,000 SMEs, tens of thousands of corporates, but of course many private individuals. So I would say we keep going all these business areas, whereby we withheld a little bit the business with financial institutions and sovereign. So just providing the basic banking services to our real customers, that's going to be our focus also in the future.
And in terms of the competitive landscape in the region, there's been some talk of whether Western European banks will pull back a little, and obviously there were banks from countries like Greece that were active in the region who've had some difficulties in their home markets. Have you seen any effect in terms of the availability of credit and the room for Raiffeisen in those markets, or is it still, the whole banking sector has been pretty active in those countries?
There is definitely a flight to quality. So the customers are very much choosing with whom they are banking, and we could see a strong inflight of business from other competitors who were partly pulling out, because everybody is now seeing what is the core business and the core market. And Raiffeisen's core business is Central and Eastern Europe. And this is why a lot of the customers came to us for banking with us, because they know Raiffeisen is there to stay.
And in terms of the challenges in the coming year, is there anything in particular that you're looking at in terms of either the economic conditions or the regulatory changes that the financial sector see?
The issue is definitely that banking has to hold much more capital than in the past, whereby at the same time the prices for financial services is not going up. So as a consequence, it's going to be tough to deliver substantiated returns on equity as expected by the shareholders. That will be a challenge. And the other is that you still have to see that a lot of the regulatory environment is a burden also on the customers. So the whole red tape is increasing, and that just produces predominantly cost and not revenues. But apart from that, I would say overall it's going to be another good year, we expect. Risks are under control, and the fundamentals in Central and Eastern Europe will continue to be strong also in the next year.
And are there any particular business segments that are outperforming at the moment?
We see that the private individuals business is doing well, especially the business on the upper end, so the private banking, the premium banking. Here we see a strong catch-up process in the region. The SMEs are the fundamental backbone of many of the economies. And some of the large corporates might see a dependency on Western Europe, and they get under pressure. So some of them might have a problem with the supply chain, with the question how they can support Western European companies who are having a hard time on their own.
Well, Peter, thank you very much for your time this evening, and I hope you enjoyed this evening.
Definitely will do. Thank you, Philip.
Now the Financial Inclusion Award, and the winner is CFG Services.
My name is Silvia Pavoni. I am the economics editor of The Banker, and I'm here with our winner for financial inclusion. The company is CFG Financial, and we have the Chief Information Officer, which is Bernard So. So congratulations on the award. We really appreciated the entry. You really went into practical solutions to help financing and banking the underbanked population of Thailand. Can you maybe give us some details about the very interesting initiatives you undertook this year?
Okay. First of all, thank you very much for the recognition by The Banker. We, CFG, as part of the Bank of Ayutthaya, we are always mindful of the responsible finance. And to us, responsible finance means financial inclusion, because we want to provide the opportunity and financial access for the people who are not able to access to the financial system normally. And for us, we have our products, which is vehicle cash loans for the customers. In this program, we actually learn a lot about the customers who actually could not get the formal financial services because of their limitations of low income, irregular cash flow, without the proper financial statement.
All the typical problems that unfortunately people that are outside of the banking network face. And some of the products that you launched were about motorcycle financing, so you use a motorcycle as an asset against which to issue a loan, but also you put together a solution for the wet market traders. Perhaps you would like to comment very briefly on that too.
Okay, for wet market loans, actually, we specifically extend our service to the traders in the wet markets. In Thailand, there are around 1,400 wet markets there. So we find it is an opportunity for us to actually extend our help to help the people who are working as traders in the wet market, because they are normally served by the loan shark. So with the high interest rate of the loan shark, basically these people could not be able to actually make their ends meet.
And thanks to your really close approach with these now customers, I know that many of them achieved very good profits from their business. Otherwise, they wouldn't have been able to achieve. What are the plans for the future?
We plan to test out more markets, and with the successful result of the 20 markets right now, we plan to add more markets in the coming year. And we actually, in the future, plan to fully launch so that the program can support itself.
Very good. Well, we shall look forward to reading more about your products next year. And in the meantime, congratulations again on your award.
Thank you.
It is the big one, the big banana. The Global Bank of the Year Award for 2012 goes to Scotiabank.
Well, our Global Bank of the Year this year is Scotiabank. I'm here with Rick Waugh, who's the Chief Executive of Scotiabank, who's just flown in all the way from Canada to pick up the award. Congratulations, Rick. And obviously one of the key things about Scotiabank, and one of the things that impressed the judges the most, I think, was the quality of the risk management of the bank. So tell us a little bit about the philosophy of risk management that you have at Scotiabank.
Well, I think it's really the core to the bank, and as it should be the core to every bank. Risk management is what we have to do well as a bank. And if we do that one well, we'll do very, very well. We'll thrive, I think, as we have. And if we don't, well, then the results will not come through. So it's absolutely essential. Risk management is throughout. It's embedded in our whole bank.
Now, one of the big pushes for Scotiabank over the last few years has been increasing your presence in Latin America and the Caribbean. I know you go back there a century, but you've been expanding, and you recently bought Colpatria in Colombia. So give us a bit of a view on how important the region is to the bank's operations.
Well, we're a 180-year-old bank, so we're a young country-old bank, but we were in Kingston, Jamaica, before we were in Toronto, which is now our head office. So that's how far back. We're in many, many of those countries. We go back well over 100 years. So that sort of is in our DNA. But really in the last 20 years, we really started to expand the footprint throughout Central America, then throughout Latin America, and now more recently for the last 20 years in Asia. So we're in 55 countries. And we now have more employees outside our country. where only 50% of our earnings are in Canada. So it really has, and what's differentiating us, I think, and making us very unique, it's emerging markets. We've actually consolidated our operations in Europe and the United States. We had a bank in Greece we sold in 2006.
That was good timing.
It was, you know, and we had these opportunities in the Americas and then elsewhere, and so it's out exceedingly well for us.
But you're still obviously a leading bank in Canada, and you're still making acquisitions in Canada and growing the business there. I think you bought ING Direct's local operations. Tell us a little bit about the home strategy.
Well, one of our weaknesses in Canada, of course, and we're a very important bank in Canada, was what we call the wealth management business. So we made that a separate business line to work with our branches and our delivery channels, but we had to do something. So there, we made a couple of important acquisitions. We bought E-Trade Canada when E-Trade in the United States got into some problems, and we have bought another company in Canada, which is one of the major mutual funds companies, one of the top performing. It's now the Dynamic Funds, Dundee Wealth. And then just very recently, although it's beyond more than just wealth management, it's really about all of the deposits, a very, very important bank, ING Canada. And that really, what they bring, of course, is a great amount of retail deposits. And so this has really enhanced our position in Canada, and we feel very comfortable where we are, especially about the future.
Well, Rick, I mean, it's a great week to be a Canadian in London because we just heard the announcement that Mark Carney is going to be the new governor of the Bank of England. Well, give us a bit of a reaction to that news. It must have been a bit of a surprise.
Oh, it was. I was scheduled to meet with him just the day before yesterday, the day of the announcement. We meet, the Canadian CEOs, we meet with him quarterly, as we do with our regulator and whatever. And that day of the announcement was the actual day that, of course, we walked in, expecting to see Mark waiting for us, and there was Tiff Macklin saying, well, Mark is not going to be with us this morning. And that was that fantastic guy. He's been in finance. We've worked with him for 10 years. You know, I'm vice chair of the IIF, where I chair the governance and best practices committee. So I've had a lot of interaction with him, both in the Canada and in the FSA, which I think is a very important, and being the governor of the Bank of England and in that FSA chair, it has a huge amount of implications, much so more if he was just the governor of Canada. So I think it's going to be very important. And I just know his background on markets, his ability to find the right balance between, whatever monetary policy, what's needed, supervision, what's needed. He knows the right balance. Independent, but very collaborative.
Okay, well, thanks for lending us Mark Carney for 5 years. Once again, congratulations on being our Global Bank of the Year and for explaining our strategy to us. And have a great evening.
It's a great honor for us, and thank you very much to the banker. It's very, very special for us. Thank you.